Welcome to the first video in the Payroll and Workforce Cycle series. Before any worker receives their first payment, your company has to answer one foundational question. Is this person an employee or an independent contractor? The answer drives everything else: which process they follow, which tax forms get filed, and what happens if you get it wrong. This is the classification gate, and it only gets made once per worker. By the end of this video, you will be able to define the 3 legal tests that govern every worker classification decision. You will be able to apply the IRS Common Law Test by walking through its behavioral and financial categories. You will be able to identify when a state ABC test applies and understand why it is the stricter standard. You will recognize the warning signals that point toward employee or contractor status. And you will know how to document the decision in a way that holds up to scrutiny. Here is the key thing about the classification decision. It happens exactly once, before the first payment is ever made. That means if you get it wrong on day 1, the exposure runs from day 1, retroactively. The decision must be made jointly by HR and finance, never by the hiring manager alone, who has every incentive to call someone a contractor to avoid the administrative burden of payroll, and never based on what the worker wants to be called. What matters is the actual working relationship, not the label. Most people assume there is one classification test. There are actually 3, and they come from 3 different sources of authority. The IRS looks at the relationship through a common law lens focusing on control. The Department of Labor applies an economic reality test for purposes of wage and hour law. And some states, California, New Jersey, Massachusetts, Illinois, and others, apply their own ABC test, which is the strictest standard of all. A worker can pass the federal tests and still fail the state test. When that happens, state law wins. The IRS Common Law Test looks at 3 categories, and the first is behavioral control. The question is simple. Does the company tell the worker how to do the work, not just what the outcome should be, but the actual method, the hours, the tools, the sequence? If you are training someone on your processes and procedures, you are behaving like an employer. If you are setting their hours and telling them where to sit, that is behavioral control. A true contractor brings their own method. They produce a result, and the how is their business, not yours. The second IRS category is financial control. Here the question is, does this person operate as a real business? A genuine contractor can make more money by being efficient and can lose money if a project runs over. They invest in their own tools, carry their own insurance, and actively market their services to multiple clients. If a worker has only one client, your company, uses your equipment, gets paid a fixed rate no matter what, and has no realistic way to profit or lose based on their own business decisions, that looks a lot more like an employee than a contractor. The third IRS category is the type of relationship itself. Is there a written contract? Does the agreement explicitly say the person is not an employee, is responsible for their own taxes, and controls their own method of work? And critically, does the relationship have an end? The most dangerous arrangement is the contractor who has been doing the same ongoing work for your company, indefinitely, with no defined deliverable and no end date. That looks like employment to the IRS regardless of what the contract says. Benefits are the single strongest signal here. If you are offering health insurance or retirement matching, you have almost certainly created an employment relationship. The Department of Labor has its own test, called the Economic Reality Test, which it applies when enforcing the Fair Labor Standards Act. The core question is whether the worker is genuinely in business for themselves or economically dependent on one company. A worker with multiple clients who made real capital investments in their business, tools, training, marketing, is genuinely independent. A worker who earns most of their income from one client, uses that client's equipment, and follows that client's schedule is economically dependent, regardless of the contract. And here is the surprising part. These are separate tests from 2 separate agencies. A worker can fail the DOL test even if they pass the IRS test, and both agencies can audit you independently. This is where things get interesting for multi-state companies. California, New Jersey, Massachusetts, Illinois, and several other states apply what is called the ABC test, and the critical difference is that it flips the presumption. Under the IRS test, you analyze the facts. Under the ABC test, the worker is presumed to be an employee unless you can prove all three prongs. Prong A, they are free from your control. Prong B, the work is outside your usual course of business. A software company cannot classify its own engineers as contractors under this test. Prong C, they are in an independently established trade. Fail any single prong in an ABC test state, and the worker is an employee full stop, regardless of what the federal tests would say. In practice, you are looking for a pattern of signals, not a single fact. The employee side of the ledger. The company sets the hours, provides the equipment, the work is core to the business, the relationship is open-ended, the person uses a company email address and shows up on the org chart. The contractor side. They set their own hours, use their own tools, work for other clients, have a written statement of work with a defined deliverable and an end date, and invoice you for their work. No single signal is decisive. The pattern is what matters, and when the signals are mixed, the safer classification is always employee. Most people assume a signed contractor agreement is enough documentation. It is not. What protects you in an audit is a one-page classification memo written at the time of engagement, signed by HR and finance, documenting which tests you applied, what the actual facts showed, and what conclusion you reached. This memo lives permanently in the worker's file. It is your primary defense if the IRS or a state agency ever questions the classification. And the last point here is the most important rule in this entire section. When in doubt, classify as an employee. The cost of overclassifying someone as an employee is small. The cost of misclassifying a true employee as a contractor can mean years of back taxes, penalties, unpaid overtime, and benefits liability. Here is what most companies miss. The classification decision is not permanent. If a contractor starts working exclusively for you, gets a company email, shows up at set hours, and renews their engagement indefinitely with no deliverable end date, the relationship has drifted into employment territory, regardless of how it started. Every contractor renewal must be a reclassification checkpoint. If you discover a misclassification internally, the IRS offers the Voluntary Classification Settlement Program, which allows you to come forward with significantly reduced penalties before an audit begins. Section 530 of the Revenue Act provides limited federal protection in narrow circumstances, but it covers only federal tax liability, not state, not DOL, and not benefits claims. It is a last resort, not a planning strategy. The classification gate is the most consequential decision in this entire cycle. 3 tests govern it: the IRS Common Law Test, the DOL Economic Reality Test, and the state ABC test for workers in high-risk states. Document every decision in a signed memo. When the facts are mixed, the safer answer is always employee. And remember, the decision is not permanent. Retest every time you renew or extend a contractor engagement. If the worker is classified as an employee, the next video will walk you through the full employee payroll process. If they are classified as a contractor, skip to Section 5 on the contractor process. Thank you for completing this section on the classification gate.